All right, we're back with Bob Froelich, Don Luskin, Peter Schiff, and Steve Forbes going to join us. Ms. Pelosi is still selling the bailout bill. Dr. Bob Froelich, what's your investment strategy right now? Have we, in fact, seen a bottom, which is still a live question? After today's trading, the Dow is up 16% from November 20th, the S&P up 20%. Bottom?
I think we've seen that bottom, and what I want to be is we want to be positioned in the U.S. stock market. I think it's going to have a good turnaround in 2009. It has a nice bounce off the low, but what I really like is a couple things happening for 2009. First, Larry, our central bank was the first to recognize the global slowdown. We've got about a year head start on the other central banks trying to play catch-up. I think our economy recovers first, which to me means our stock market recovers first. I see $4 trillion sitting in money market accounts looking for something to invest with interest rates as low as they are. I think they got to come into the market. Then I got another $3.5–4 trillion in sovereign wealth funds.
Favorite sector?
Ours, financial services.
Financial services.
It's been beaten to death. It's been absolutely destroyed to death.
Bounced off the bottom very nicely. Don Luskin, take a look at today's trading. Energy and commodities up 4 or 5%. Metals and mining up 9.5%. Is there a commodity play going on here?
I think there is. In fact, I think the best investment strategy right now is just to look at everything that did the worst in the catastrophe that ended on November 20th and just do that. Just rank order them. Pick the worst. Financials, the second worst. Materials. You know the roll of honor. Pick the ones that did the worst and buy them. Because whether this is merely a bear market rally or the beginning of a new bull market, it doesn't matter. We can make that decision in a couple weeks or a couple months. But we're definitely coming back for the reinvigoration of the willingness to put a little confidence in stocks and take a little risk. They just got too cheap, and the ones that got the cheapest are going to perform the best.
Peter Schiff, your thought?
Well, look, I've been telling people to avoid financials for years. I don't care if they bounce. I wouldn't touch them. But a lot of us, what else Don is saying, I like. You know, we talked a little bit about inflation earlier. You know, the government is financing all the stimuluses, all the bailouts with inflation. No one is talking about trillion-dollar tax increases to fund all this new government. It's all going to be funded with inflation. They're going to create money. And once this dollar rally, this phony rally runs out of steam, the dollar is going to fall through the floor. So you want to own everything that's real. You want to get into real assets. You want to own precious metals. You want to own energy. You want to own the base metals. And you want to invest abroad. I mean, looking around the world, there are stocks trading at 2 and 3 and 4 times earnings right now, paying 10, 20, 30% dividends.
Steve Forbes, you hear Peter Schiff. You buy this, the dollar's going to sink some more, and it's time to jump back into gold?
Oh, well, I think gold, as you know, Larry, is the best indicator of what future inflation is. It's moved up a little bit. But in terms of the dollar, I want to see what this new administration does in having a stable dollar. Democrats and Republicans have done it in the past. Bush did not do it. If they do that, that'll go a long ways to getting this economy back on track.
They may take a hard dollar policy.
They might.
All right.
Work.
We're going to leave it there. Bob Froelich, Don Luskin, Peter Schiff, Steve Forbes. Thanks for everybody. We're coming right back. Much more ahead this evening. CNBC Reports continues.